Ever wondered why your investments never seem to bring the desired returns? It's often due to misconceptions and common mistakes. Many believe investing is akin to a lottery, but it's not about getting rich quick, it's about making informed decisions. Opening. Investing may seem complex, but it doesn't have to be. At its core, investing is about putting your money to work, allowing it to grow over time. Think of it as planting a seed. With the right care and conditions, that seed can grow into a robust tree, providing shade, fruit, and even more seeds to plant. But just as you wouldn't plant a seed without understanding what kind of tree it will grow into, you shouldn't invest without understanding what you're investing in. It's crucial to comprehend the potential risks and rewards, the history of the investment, and how it fits into your overall financial strategy. Investing isn't about getting rich quick. It's about steady growth over time. It's about patience, research, and making informed decisions. It requires discipline, commitment, and above all, knowledge. Remember, knowledge is your greatest weapon in the world of investing. Many people struggle with investing due to lack of knowledge, emotional decision-making, and following trends without understanding. This is a reality that can't be ignored. With the world of investing being as vast as it is, it's easy to feel overwhelmed. But let's break this down. Firstly, the lack of knowledge. Investing is not just about throwing your money into stocks and hoping for the best. It's about understanding the market, the economy, and the specific businesses you're investing in. Without this knowledge, you're essentially gambling, not investing. Then there's emotional decision-making. The stock market can be a roller coaster of highs and lows, and it's all too easy to let our emotions guide our decisions. We buy when we're feeling optimistic because the market is up, and we panic sell when we're feeling pessimistic because the market is down. This is a recipe for disaster. Successful investing requires a calm, disciplined approach, not emotional reactions. Lastly, following trends without understanding. In the world of investing, trends can be both a blessing and a curse. They can point you towards potential opportunities, but they can also lead you into traps. Just because a particular stock or sector is hot right now, doesn't mean it's a good investment. Without understanding the fundamentals behind the trend, you're simply following the herd, and the herd can often be wrong. These challenges can significantly hinder your investment progress. You might find yourself stuck in a cycle of bad decisions, losing money, and becoming increasingly frustrated and disillusioned with investing. But don't despair. These challenges are not insurmountable. With the right knowledge, the right mindset, and the right approach, you can navigate the world of investing effectively and successfully. Understanding these challenges is the first step towards overcoming them. So keep your wits about you, stay curious, and never stop learning. The world of investing is full of opportunities, but it's up to you to seize them. Successful investing hinges on three key principles: research, diversification, and long-term planning. The first principle, research, is the foundation of all successful investments. It's like the blueprint to a building. Without it, you're merely guessing your way through. Research involves understanding the business or asset you're investing in, its market position, financial health, and future prospects. It's about digging deep into the company's annual reports, earnings calls, and industry trends. Remember, the more informed you are, the better your decision-making will be. Next, we have diversification. Picture this, you're at an all-you-can-eat buffet. You wouldn't just pile your plate with spaghetti, would you? No, you'd want to try a bit of everything. That's what diversification is about. Spreading your investments across different asset classes, sectors, and geographical regions can help you reduce risk. If one investment performs poorly, others may perform well, balancing out your portfolio, but be careful. Over-diversification can lead to mediocre returns. The goal is to strike a balance. Lastly, let's talk about long-term planning. Investing isn't a sprint, it's a marathon. It's about having the patience to let your investments grow over time. The stock market, for instance, is known for its volatility. Prices can swing wildly in the short term due to various factors. But in the long run, these fluctuations tend to even out, and the overall trend has historically been upward. So resist the urge to react to short-term market noise. Stick to your plan, keep your emotions in check, and let the magic of compounding do its work. It's important to note that these three principles are not independent of each other. They are interconnected. Research can help you make informed decisions about diversification. Diversification can help you manage risk, making it easier to stick to your long-term plan. And long-term planning can give you the patience to conduct thorough research and make rational decisions. But here's the kicker: these principles alone aren't a guarantee of success. They are tools to help you increase your chances of success. There's always a degree of uncertainty and risk involved in investing. That's why it's crucial to continuously educate yourself and stay disciplined. And let's not forget, everyone's financial situation, goals, and risk tolerance are unique. What works for one person might not work for another. So, tailor these principles to fit your individual needs and circumstances. So there you have it. The 3 pillars of successful investing: research, diversification, and long-term planning. By focusing on these 3 principles, you can significantly improve your investing success. Now that we've discussed the common challenges and the 3 pillars of successful investing, it's time to take a look at your investing strategy. Perhaps you've been investing for years, but the returns have been less than stellar. Or maybe you're new to the investing world and you're not sure where to start. Either way, it's always beneficial to reevaluate and adjust your approach. Reflect on your own investing habits. Are you making decisions based on emotions or following trends without fully understanding them? Are you trying to time the market or chasing after the latest hot stocks? If any of these scenarios sound familiar, it's time for a shift in mindset. Now consider the principles we've discussed: research, diversification, and long-term planning. These aren't just theoretical concepts, they're practical tools that can guide your investing journey. Research is about understanding what you're investing in, from the company's fundamentals to the broader economic landscape. Diversification is about spreading your risk, not putting all your eggs in one basket. And long-term planning is about setting realistic goals and staying patient, even when the market is volatile. But remember, there's no one-size-fits-all strategy in investing. What works for one person may not work for another. It's important to reflect on your own financial goals, risk tolerance, and investment horizon. Adapt these principles to your unique circumstances, and don't be afraid to seek professional advice if needed. The turning point in your investing journey comes when you stop chasing quick wins and start building a solid, disciplined strategy. It's not about getting rich quick. It's about growing your wealth steadily over time. It's about making informed decisions, not gambling on uncertainty. Change is the only constant in life, and that includes your investing strategy. So take this opportunity to reflect, adjust, and set a course for a successful investing future. In summary, investing is not about chasing trends or making quick profits. It's about understanding the market, making informed decisions, and having the discipline to stick to your plan. We've debunked some common misconceptions about investing, such as the notion that it's all about luck or that it's only for the wealthy. We've also shed light on the challenges of investing, including the pitfalls of emotional decision-making and the risks of following trends without understanding the market. We've highlighted the importance of research, diversification, and long-term planning, and we've emphasized the dangers of trying to time the market or chase hot stocks. It's clear that to be successful in investing, one must be educated, disciplined, and patient. It's a journey that requires continuous learning and adaptation, and most importantly, it requires time. So don't rush. Take the time to understand your investments and make informed decisions. Remember, successful investing is a marathon, not a sprint. If you found this video helpful, consider subscribing for more investing tips. Your input is also valuable, so don't hesitate to share your own investing experiences below. Thank you for watching, and remember, your best investment is in your knowledge.